chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin has been on a tear. In the early hours of March 10th, Bitcoin was trading around $19,600. It whipsawed around $20,000 until around 12 p.m. Eastern, when it was announced that Silicon Valley Bank was going into FDIC receivership. Bitcoin promptly shed $200, jumped around a bit, and spent most of the weekend trading above $20,000. By this Monday at 9:30 a.m. Eastern, it was trading above $22,000. And then the fun began. 24 hours later, Bitcoin was trading at $26,175. It is currently trading around $26,600. I've written on CoinDesk.com that narratives matter a lot when it comes to the price of assets. Just ask Fed Chair Jerome Powell, who answered a question about the Fed's 2% inflation target last week with, "People's expectations of inflation have a real effect on inflation." So what happened to the Bitcoin narrative to lead to this type of aggressive 35% trough to peak change? Well, a lot happened. The biggest being bank failures. We saw 3 banks fail recently with Silicon Valley Bank, Silvergate, and Signature. The question is, it actually isn't clear who is at fault for these 3 bank failures. Because who even knows if these banks failed due to insolvency? Sure, Silicon Valley Bank failed due to a bank run which was spurred on due to poor duration risk management. And yes, Silvergate was running into some issues and had to take FHLB dollars, but their eventual wind down was actually reportedly voluntary. And then with Signature Bank, the regulators can't even get straight if the bank was shut down because of crypto or because of a crisis of confidence in leadership. Maybe they were insolvent. According to the FDIC, banks do have a lot of unrealized losses on their balance sheet. Let's add the fact that there are other banks like Credit Suisse and First Republic Bank which are failing and needed liquidity injections to stay alive yesterday. On the former, it is telling that the Swiss central bank wanted to save Credit Suisse, and on the latter, it's even more telling that it was 11 of First Republic's competitors which saved it for fear of contagion. Otherwise, why wouldn't they just let a competitor fail? That all said, we know it's not Bitcoin which caused these banks to fail. All we're seeing is a fractional reserve banking system under stress due to rising interest rates, and it's showing cracks. And so the narrative goes, as the banks fail, opt out and buy Bitcoin. That narrative is certainly strong enough to propel price. Also, we had stablecoins, which were unstable. We saw US dollar stablecoin USDC lose its $1 peg last weekend. The loss of the peg rightly spooked a lot of people. It seems that USDC, like banks, is not immune from counterparty risk as some may have thought previously. So if we establish that both USDC and the dollars in a bank account have counterparty risk, you might ask yourself, is there something without counterparty risk? Well, yes, there is. Bitcoin. And as if we needed another point, we have the US Federal Reserve, which looks like it may be rearing up for a suspension of interest rate hikes, which could give the entire market a well-needed breather. So in all, there's systemic global bank risk. Stablecoins and crypto prove that they need those banks to be stable. And with all the general angst, the Federal Reserve may be pulling back on rate hikes. All that has added up to Bitcoin swinging up massively over the last week. If that continues is to be seen. To be sure, uncertainty is never cause for celebration because of its potential negative consequences on people's lives. But for the time being, Bitcoin looks like a way to opt out of this most recent crisis.